about 95% of the brokers in the United States because I said, this book wouldn't have been possible without the inept, unfair practices that brokerage houses, uh, wirehouses, banks, CPAs, and lawyers have done wrong for the American senior. Now, let me tell you what I mean by that. When you reach retirement age, 99% of the people, they'll stop working and live off of their savings and get something called Social Security. If you were deferred your taxes for so long, that deferral again has gone from here to here to here to here. So your nest egg is now an ostrich egg. And then you're required to take the distribution, whether you want to or not, let's say 10% from where it is now by the time you turn 73. Guess what? You pay whatever it is, and it's not fair to a lot of seniors.
Hello, Lance. It's so nice to have you on the show today. How are you doing?
I'm well, Elijah.
Beautiful, and thank you
I'm
so
well.
very much for being here. You see, I truly appreciate you. And you see, Lance, oftentimes I love to thank my guests for two things. And I do this so often to the point where it has become my anthem. So, firstly, my man, I want to say thank you so very much for investing in yourself. You see, Lance, you are on this platform right now because you did invest that in yourself. And oftentimes, my man, I love to make reference to the amazing mango tree. You see, some couple of months back, I was on a particular road, and just by the roadside, Lance, there was this very tall, unattractive mango tree. And I used the word unattractive because the mango tree's got no mangoes on it, and the leaves were all dry. So I just walked past it and I went my way. But you see, Lance, just recently I was on that same road, and this time around, hmm, a lot's changed about the mango tree. The mango tree caught my attention pretty good from a distance, and immediately I got the urge to move so close to it, of which I did, and it wowed me because now the mango tree's got a lot of mangoes on it, beautiful green leaves and healthy branches. And not just mangoes now, Lens. I'm talking about ripe mangoes. It was such a lovely experience that day, and I was so excited. Here is my point. The fact that you dedicated your time, energy, and resources to becoming the amazing Lance that you are today, that alone has made it impossible for me to skip you. And that's why you got the request from me to be on the show because I was attracted to the fruit of all that you're doing. Your philosophies, your insights, the impact your work is having, and how you are offering your solutions. For example, your wonderful book. These stuffs are beautiful. And just before I sent you that request, my man, I said to myself, I've got to benefit from these beautiful things Lance is doing. And not only me now, because, I don't want to look selfish, and even with the audience. And here we are today with the amazing Lance. So thank you so very much for doing that to yourself. And secondly, thank you for saying yes to the invite. Because if you had said nope, there was nothing Elisha could do about it. Thanks so much, my man.
You're welcome. You're welcome. I was looking forward to it. I always like to talk to people that have an interest and want to learn new and different things. I was wondering, though, I mean, where you are located, my book and my career has been about things in the United States, the tax laws, the savings and investment laws. So I wasn't sure how much it would actually be applicable to other parts of your audience. But then I realized it's more important for people to understand the basic concepts. I've been a big advocate that it's not what you make, it's what you keep. And in the United States, we've got very big taxes. I'm not sure what it's like where you are, but I knew people that would make $1 million a year, but by the time they would spend it all on cars, trips, partying, whatever the case may be, they maybe ended up with 70 or 80,000.
Mm.
They would blow it. And so it's not what you make, it's what you keep, and being disciplined to do that. And in our country, it's, I always say, use the tax law for the benefit of you and your family, not the expense of. So, in other words, know what the rules and laws are so you can operate within it to better your family, to better your life, to better your future. So, that's always been the premise of my career for 37 years.
Lance, you're doing a very important one, I tell you. And I held that. It is not about what you make, but what you keep. Wow. Okay, let's just get right into it. So, I
Okay.
am quite excited to have you on the show today, Lance, for some reasons. Firstly, my interest in knowledge seeking. I believe in order for one to transition from a terrible situation to that of a beautiful one, Lance, I believe it takes the application of knowledge, quality information, and not just knowledge alone, but the application of it. And you see, my man, ever since I discovered that light in the Hebrew means knowledge and darkness, ignorance, I've been so keen to knowledge seeking. Why? Because I do not want to remain in the dark. So that's going to make our conversation today very important to me and even to the listeners. And the second reason why I'm excited to have the incredible Lance on the show is for the sake of the audience. You see, my man, we live in an age where information is as abundant as grains of sand. We've got a lot of information flying out there. So those folks trust me for quality, high opening, and very important information, of which I am totally convinced, my man, that our conversation is going to be insightful and impactful. So for that reason, Lance, let's get started with your introduction. Talk to us about your personal or your professional journey, because right now we are so curious. We want to know how Lance got here. And afterwards, I've gotten some beautiful questions for you. Okay, Lance, over to
Wonderful.
you.
Okay. Started in the financial services industry for the simple reason, and this sounds really bad, but I wanted to be able to legally screw over the government. I wanted to be able to take the tax laws, take the rules, maximize them to myself and my family, like I said earlier. So that was my focus. I said, there's a reason all of these highly successful and wealthy people are successful and wealthy. Yeah, they work hard. Yeah, they got a great discipline. Yeah, they probably work harder and longer than a lot of people, but they also are smart and they're taking advantage of the way the law is written for the benefit of them and their family. And I said, I can do that. And then I started to do it. And then I started being able to recruit and train other agents underneath my umbrella, if you will. And then I would teach them, kind of like, let's biblically, like a disciple. I would recruit them, train them, and then send them out. And so that was what was my original main motivation, is to do it, to become above reproach for the income that I created. So I would never be on the radar of the government, or in the US, it's called the IRS, the Internal Revenue Service. Scares most Americans. And it was making sure that everything was done correctly. So that's how my career started and then blossomed. And then there was some very wonderful products that came about for helping people 45 to 65 years of age trying to get into the retirement situation. And it was a lot of bad information out there. Now, I honestly hope that maybe you download an ebook of mine or something, it would be very eye opening for you and for anybody else that you know. And let me tell you why. In the United States, we have big, what they call brokerage houses that Merrill Schwab, Morgan Stanley, and then big banks like Bank of America and Wells Fargo, and a lot of big institutional money. And they really kind of go out of their way they think it's their money, not yours. So that's the way they kind of treat it. And in the mindset of most all financial planners and brokers and advisors, it was about, oh, accumulate all your money, put it in what we call an IRA or a 401k, allow that to build and build, and then what they call defer. Defer the tax, defer the tax, defer the tax until you get into retirement because it's going to be better then. And all they've done is defer tax, which the money has compounded on itself, and the tax bill has gone up and up and up. And honestly, a lot of seniors can't afford the tax when they're required because you are required, whether you want to or not. At 73 years or older, you're required by law in the U.S. to start taking that money out, whether you want to or not. And if you start taking it out too little, they penalize you. Too much, they overtax you. So it's not good. So I've always been, and that's what I'm talking about. I hope you get a chance, even the first paragraph of just the forward of the book, for lack of a better way to put it, pisses off about 95% of the brokers in the United States. Because I said, this book wouldn't have been possible without the inept, unfair practices that brokerage houses, uh, wirehouses, banks, CPAs, and lawyers have done wrong for the American senior. Now, let me tell you what I mean by that. I don't know, again, where you're at, but where we are, when you reach retirement age, 99% of the people, they'll stop working and live off of their savings and get something called Social Security. If you were deferred your taxes for so long, that deferral again has gone from here to here to here to here. So your nest egg is now an ostrich egg. It's big. And then you're required to take the distribution, whether you want to or not, and whatever the tax rate is. If the tax rate's gone up, let's say 10% from where it is now, by the time you turn 73, guess what? You pay whatever it is. And it's not fair to a lot of seniors. So careful planning. That's one. So my book, if I can plug it here for a second, Zero is Your Hero, and why you need a zero in your retirement plan.
Plan.
So let me talk about what the zeros are. The first one is the zero of having positioned yourself in the zero tax bracket when you get to that age. And it's not something that just happens. You have to meticulously plan and put the steps in place before you do anything like that. So that's the first zero. The second zero comes from when you have your savings, your investments. Unfortunately, the stock market does this, it does this, it does this, it does this, right? Everybody anywhere in the world knows that markets do that. That when most people choose to decide they need money is when it's at the bottom.
So
So
true.
they've lost what they had up here. So the second zero is never lose your principal or your previous interest earnings of your nest egg. And I talk about that in my book as well. There's products you can do to correctly position yourself for this type of a safety, if you will. The third one, as bad as taxes are, most people would love to pay the taxes if they didn't have to pay the medical bills for when they get older. Unless you have a specialized long-term care product that you had to buy when you were younger, you've got to pay for medical bills, hospital bills, long-term nursing out of your own pocket. So I tell people, which asset are you going to sell first to make sure you get medical care? And they go, I don't want to sell any of them. Well, that's the plan you've chosen because you have chosen inaction, inactivity. You have not been proactive in your choices to make your future safe. And medical expenses are significantly more than what taxes will be. Do you have nursing homes where you are where the elderly or sick have to go to be taken care of?
Yeah,
Okay.
yeah,
In the US, depending on where in the US you are, that can cost anywhere between 9,000 a month and 20,000 per month. Now, how long do you want to write a check for, let's just say 15,000 a month? I'm guessing the answer would be that long, right?
yeah.
Zero. But you're going to have to in our country if you don't do the proper planning. So that's the 3 zeros that I talk about. Zero tax bracket, zero losses in your portfolio, and zero problems with making sure that you're able to financially take care of yourself or have the right products to cover your long-term care expenses. Because you know what? People would rather pay 20, 30, $50,000 in tax than pay 20,000 a month for 24 months for medical bill. If your mom or your father or your grandfather was sick or injured and you were very close with them, or even you, what would you do to make sure you're covered? The answer is anything you could. So that's how I got into what I do. I provide incredible knowledge that no one talks about. All of those brokers, all those financial advisors, all those wirehouses do not discuss that at all. All they talk about is accumulate, 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 defer, defer, defer. Okay, you're deferring a huge tax liability and you're not taking into account if something happens to somebody. And in the US, after the age of 67, 70% of the people that are retired are going to require some sort of long-term care within the first 3 years. That's how bad it is. And I say, what asset are you going to sell first to cover that? So that's my little about me.
Amazing, Lance. I tell you, what you're doing is very important. And I feel like my audience will greatly benefit from this. And that's your powerful book. But there are some questions I'm still a bit curious about. Let's say we've got some folks who are retiring, all right? So, what is one thing someone nearing retirement should do today?
Well, in my opinion, uh, I had a talk show, live radio talk show for 10 years, 5 days a week. I'd be on and people would call in and ask me questions, from questions like that to questions. I had one little lady, it's my wife's favorite episode. She was on such a tight fixed income. She was asking me how much toilet paper she should buy when it goes on sale. So I've had every kind of every type of question you could possibly imagine. But without being specific, in my opinion, making sure that you're able to your money, have access to your money and not waste it all in tax. Let me ask you this. Let me tell you a story that I always tell. I've spoke over 735 times in 35 different states. And one of the things I always bring up is this exact point. And I'll tell you what it is. I go, my wife will come in from out shopping and she's carrying big shopping bags. And I go, honey, I thought we said we're trying to, save money and, not spend money like that. And she goes, oh, I am saving you money. Everything was on sale. So it would have cost more if I would buy it later. Now it's all on sale. So she's saving money by buying it on sale, which means she just wanted it basically. But in the United States right now, we've been fortunate with the way the tax situation is that taxes have been reduced a lot. So I say in my book also, taxes are on sale. Would you go spend more money for something or would you rather spend money on it when it's on sale?
When it's on sale, man, I would spend money on it when it's on
Exactly.
sale.
So if people have money in an IRA or a 401k, I tell them, look, taxes are on sale. They've never been this low and they're going to have to go up. So the smart play is to look at converting as much as you can over a period of time to get your money from what we call forever taxed to never taxed. So that's the premise. So we work with people to reposition money out of a taxable situation, move it into a tax-free situation. So that's what I would do if somebody's going into retirement. That's the first thing I would speak to them about. Now, if you understand, and I'll give you another thing that I always talk to people about. If you understand the U.S. has taxes, we have a federal tax and we have a lot of the states have a tax in whichever state you live as well. Some do not. So if you have over a certain amount of money that you earn, you could pay up to 39% of that money in tax. Then if you're in a state like California, you're going to add on top of the original amount, not what's left over, they're going to add another 15%. So you're at 55 plus percent in taxes. So I say to people, I go, I have two piles of money. One of them is $1 million. The other one is 700,000. Which do you want? And people go, oh, I'd rather have the million. I go, the million is in an IRA and it's all taxable. And by the time you pay tax on that, you're only going to have about 500,000 left
Mm.
because you're going to spend 4 or 500 in taxes. The 700,000 is tax free. Now,
Oh,
which pile of money will you want? And they go, oh,
700, of course. Amazing, Lance. Amazing. Wow. You've just opened my eyes to something beautiful. I never knew that. Amazing. So to bring this to an end, and I would also have to bring you to the show again, maybe some other time next year. So to bring this to an end, Lance, what would you like to leave the audience with, like a final thought? And to those individuals who love to purchase your wonderful book, reach out to you, ask you questions, how can that be possible?
the books are available in either an ebook or a paperback or a hardcover at Amazon Kindle, Barnes and Noble, Google, Google Books. They're in a lot of places. And I share with people that if you even just get the ebook, the amount of information that you learn and have access to, I mean, people used to pay me a lot of money to just cover what I just covered with you. And so they're getting incredible knowledge that they can keep with them forever for $7. So
$7.
for an ebook. So
Amazing.
it's well worth the price. It's well worth it. So my point with everybody is again, it's not about what you make. It's about what you keep. And it's important to look at what potential things can happen in the future. Now, I don't know about you, but I don't have a crystal ball. I don't know what the future is going to be. That's why I help people plan for all the what ifs. What if this happens? What if I have a stroke? What if I develop cancer? What if I get hit by a car and break my back and neck? Who's going to take care of me? Where's the money going to come from? These are all the things that I think people don't ask themselves or they're not honest with themselves of the problems that they need to address while they're young, while they're healthy, while they still can. I hope that covered that for you.
Oh, you're very, very profound, man. And that's a great reminder. So that's going to be the end of the show, Lance. Thank you for coming and thank you for sharing this
My pleasure.
wonderful stuff with us. It means a whole lot, my man. Thank you.
But by the way, real quick before you shut me off, if they get the book, uh, I have an email address at the back of the book that if they want to reach out to me, they can. If they buy the book, they'll have access to an email and they can send me an email and I'm happy to respond as I have time.
Beautiful. That's so generous of you. Thanks so much, my man.
Thank you.
Mm.